Hello, everyone. I'm really happy to see all of you here. I was actually live upstairs, and what I was trying to do is to do some marketing for Catapult and hoping to get a discount when I pay the bill at the end of the day. I also want to say hello to our guests and our colleagues in our overflow rooms. I guess many of us are already familiar with the hybrid model, so we wouldn't mind being a little bit further away from the main auditorium. Look forward to all the fist bumps during the break time. It actually feels very surreal. Some of you may have attended our last Investor Day 3 years ago. It was a very memorable one. We had just merged with ASB, and we welcome many of our new leaders from ASB who are still here today, okay? And 3 years on, we're CLI. And as Chi Kun alluded to, our transformation is still ongoing, and the transition that we've been through over the past 3 years could not have gone well without the wise counsel and stewardship of our board of directors, which is why we think it's very apt to start CLI's first Investor Day with members of our board, both at CLI and also at CICT, our group, and we're very honored to have them here with us. And may I please introduce, firstly, Miguel, Chairman of CLI, and Mr. Anthony Lian, CLI's Lead Independent Director. And finally, we have Mr. Swee Lian, Chairman and Non-Executive Independent Director of CICT. Please welcome them on stage.
This is clearly a question that is top of mind for a lot of us, and I would have to profess that, like you, I don't have the answer in terms of the geopolitical situation. As Chi Kun said earlier, I think there is going to be a lot of challenges, but the question is which way and how fast this whole world is going to change in terms of decoupling. So let me answer the basic, how CLI board had navigated through the last few years, especially during the pandemic period, and also the time when we did this major restructuring, we call it internally the Project Amazon. First of all, CLI's board is very focused in discharging 3 very core responsibilities. And this is something that we feel if we don't do well, then we really don't have a good board. And those 3 responsibilities that I use the term called the big 3 all the time. One is that we must have the highest level of corporate governance. I think that's something that we cannot take any shortcuts to in terms of not maintaining that highest level of corporate governance within CLI. The second of the big 3 really is the strategy. And this is particularly important as we are moving from what I call a real estate conglomerate into a pure asset management company in real estate asset classes. So this is very important in terms of how to ensure that we supervise and oversee that the company has a sound strategy that we can execute, not just for the next 1-2 years, but in the longer term, of making sure this is going to be a company that will be able to achieve the vision that Chi Kun mentioned about earlier. And the third of the big 3 is the people and culture. Any good strategy, any great company, you just need to have the right people, the right culture to carry out the strategy plan and to make sure that that the company is one that the investor will want to invest in the long term. So these are the big 3. I would say that if we can do those big 3s well as a board, a CLI board, I think we'll be a pretty good board. But we are not really a great board as well. I always take the view that a lot of the benefit of having a great board is not within the boardrooms. It's not in the minutes that you can read about. It's not in all the formal process that we have within the board's interaction. Really, it's how the board look at leveraging their experience and their expertise to help out the management team. So a process whereby we can build a culture where the board members, in this case, 9 of us, with different expertise, different experience in many parts of the world, will be able to leverage what we know in a very positive and friendly way with the senior management of the company. And this is more than art and science. I don't think you can take the box of if you do A, B, C, D, therefore will be a good board. It's the trust we need to build with the management that they will come to us for consultation, for advice, and a lot of times it's not even for decision. It's just to bounce ideas and all this. And I think as a board, we have done very well in the last few years since I've been on the board, observing how the other of my fellow board members and the senior management interact. Just a case in point. The highly successful demerger of CapitaLand Limited into asset management company continuously to be listed, and the privatizing of the development company did not start out in the boardroom where we asked for approval. It started with a lot of conversation, sidebar conversations about what are the best next thing to do for CapitaLand going forward, given that the company had been running about 20-25% below NAV in the last 10 years. So the future can be predicted without even the pandemic that it will be not a very good satisfactory result for the shareholders. So the conversation starts with what if and what's next, those two questions. What if we do this? And there are many reiterations of company structure that we look at. So we ended up with the project I mentioned, we call it Project Amazon in the emerging, but there are many other possibilities, other way of looking at it. But the idea is the board of directors always are there to give advice and also to help management to firm up what are the best next step to take for the company. So as a result, it's a highly successful demerger, as some of the shareholders here remember that all of you get a good chunk in cash, and then the share price obviously went instantly from below NAV to above NAV, and we look at this as a trajectory that we're going to project in the future or going forward in a company that's very different and very enriching for the shareholders as well as looking at that. So going back to the second question, geopolitical changes and China, etc. I really don't have a crystal ball, as you don't have either, and you can all listen to the experts about what China will be, the word you use is deglobalization, decoupling, and all these other way. But how fast, how big, and how much it affect the world's economy, and how we even how countries and people cooperate. I don't think I own the answer, so I'm not going to get into that. However, I do want to point out that CLI is a company that has been in China for over 20 years. We have very strong footprint there, a lot of people on the ground, a few thousand employees on the ground, and we are well trusted by the Chinese as much as we're well trusted by the West. So if you look at CLI, we really more a microcosm of Singapore. We know many of you in this room, our investors are Chinese in terms of your ethnic origin. We know in terms of what we know, how we've been brought up, we understand China more so than a lot of countries in the West. But at the same time, we also are educated in English, we're using English as a medium now, that we do understand how to navigate and work through with the Western countries as well, especially the Five Eyes. So I think we are in a very unique position in China that we can be trusted. No question, the capital base will change. There'll be a lot more capital coming from internal China. The CICT of the world may not be able to invest overseas. Their money is not as welcome by some of the countries in the West. But still, there are a lot of China money going more trapped in China, want to invest. But we can be trusted to do that. At the same time, there are a lot of other investors that are not taking the view of the US-led kind of opinion about the decoupling. And case in point is all the Middle East oil money. They are going to continue to flood around the world, both in the West and in China. And we can also be a very trusted partner, GP for those investors as well. So I would like to think that with the changes in the geographical environment in the world, particularly with China, we occupy a very unique position to do well and to be able to carve out a very unique space that most of the other asset management companies would not be able to do. Most of them, we need to take side. We need to say, I'm with the West, I'm with the East. But we can be that unique company that can be successful both in the West and also in the East as well. So I'd like to leave that as a thought for you, if there's anything at all coming out of this session, is that we are very bullish about the world in terms of where our position is in playing this card of being a smaller Singapore, a microcosm of Singapore, and we hope that that will become a unique strength in going forward.
for all the diversity you might be able to attract to the board, it doesn't work if you don't have a chairman that encourages open discourse and robust discussion. And I'm not brown-nosing up to Miguel, but that's the kind of dynamic we have at the board level. And then I have to pay tribute to management led by Chee Koon. So what was the problem we were trying to solve at CapitaLand? It was precisely because we were lumped together with all real estate development companies that we were trading under NAV. So how do you unlock value for our investors, for all our shareholders? And we had multiple discussions. Management, to their credit, didn't use the pandemic as an excuse for saying, let's hold everything until we get a clearer picture. Can you imagine CapitaLand today if we had not demerged, if we had not restructured? So it was courage, but it was also fortuitous. A lot of serendipity around the timing where we were able to build out our new economy assets. We were able to diversify. Our EBIT from China alone was above 50% in the old CL. Today, it's around a third, right? So I think there are a lot of things that came together for CLI now, that is very encouraging. Miguel talked about the challenges of the geopolitical situation. I think it's going to get more complex, and this is where we need investors who actually think in the longer term. If you approach many institutional real estate investment agencies or institutions, and you ask them what is their target allocation for real estate investments in Asia, it's one number. What is their actual? It's a much lower number, I guarantee you, right? The reasons being, number one, it's difficult to find quality real estate assets in Asia. Unless you have boots on the ground, people with knowledge of the local markets, it's very, very difficult. Number two, not enough trusted partners. So it harks to Miguel's point about how we want to position CLI as the go-to entity for serious long-term investors that are keen to have exposure to this segment of the asset, all the asset classes, real estate investments. We're building out our real estate investments. We have leadership position in our public market REITs, ably chaired by my dear friend and former colleague here, right? We have leading position in our hospitality business, in the Ascot business. And now we've brought in market leaders, in the private equity world, in real estate. And rather than park them, which is the traditional way, you bring in new talent from outside, and you park them under old leadership. So either they get subsumed in the old culture, or they just don't get a chance, right? I think it is another feather in Chee Koon's cap that he's brought in very experienced operators and catapulted, not the pun, catapulted them into the top echelons of the leadership bench at CLI. So it creates some kind of competitive tension. It creates an atmosphere of needing to be really good at what you do to be able to defend. And I've noticed, I've only been on the board for 5 years, I've noticed that the deliberations amongst management, between management and the board, and at the board level, have all become much more robust, much more focused, less anecdotal, and very data-driven as well. So I'm encouraged by the change in tone. Is it going to be difficult? Yeah, because the macro factors out there are going to be challenging in the next 2 years at least. What started out as a price increase due to supply chain disruptions because of the pandemic has now morphed into something more serious, right? The war in Ukraine has created price spikes in energy, right? The dollar has risen, interest rates have gone up. So I think the next 2 years are going to be challenging, but I think this is the best time for CLI to start. Just as Blackstone got their beginnings from the great financial crisis. So this is the best time for us to raise funds, have dry powder, and then when asset prices correct after 20 years of non-stop rises, that would be the best time for us to accumulate. So I think we are in a good position. We need investors that understand our long-term vision for the company. And this is not a quarterly trade.
Thank you very much. Thank you for inviting me to this day. As you know, CICT is part of the family, but imagine a little wall here. So I think that being part of a very strong sponsor definitely has its advantages for a REIT, okay? Of course, we have to be very conscious of certain China walls that we have to do because we are a separate vehicle and we have to be sure that we're always acting in the best interest of all our unit holders, not just our largest shareholder and sponsor. So we make sure that we are doing that for everyone, okay? So being part of a very well-run and strong sponsor group definitely has its advantages, but what could be the pitfalls, okay? So I'll tell you, one, of course, I used to be a regulator for my sins, so I'm very conscious of it, is on the governance side, okay? So every time we have an IPT, an interested party transaction, we're very, very careful about what we should be doing, okay? So we have a board of 9. We have 6 truly independent directors, and 3 who are non. We have 1 who's an executive, we have 2 who represent the sponsors, but 6 very independent directors. So when a deal comes in, and especially if it is a deal related to our sponsor, okay, we will have very independent looks at it, even if it is not strictly required by the law. Can I put it that way? And it has to be done. So we will bring in external consultants, be it legal, be it financial, be it IFAs, to look at the deal. It has to go through its paces with our audit committee, which is a very, very strong committee comprised fully of independent directors. And we have a standing joke in the board of CICT that after every audit committee, there are pools of jelly outside, which is the leftovers of all our external independent consultants who have been taken through the ringer through our audit committee. And then it comes to the full board. And then there is another step beyond that, which is transparency and disclosure to everyone, so that there's fairness to everybody, both all our unit holders, as well as the analysts, as well as regulators, to see what we have done. So definitely, it has its advantages, but we do have to have guardrails, and we do, okay? And we learn. We are able to benefit from the synergies that the larger group brings to us, okay? For instance, CICT made its first foray into Australia in the last year or so, and we were able to benefit on the expertise and the team on the ground in Australia from our sponsors, and we were able to take advantage of that. So definitely there are upsides, okay? But you have to have your guardrails. Thank you.
Okay, first of all, I think being mostly shareholders in this room, I earlier mentioned about the below NAV performance before the before the merger, and now we've been consistently, even in a very challenging market today, still trading above NAV. I think at one point, our CFO, Andrew Lim, told us that we created over $10 billion of value to the shareholders. So I think that has come as a talking point. That, and this was done during the pandemic when we were not able to meet in person, we do it through video. So there are a lot of really energy and positive forces that was in place at the time to make this deal happen. So this is something that I think has done well. But beyond the quantitative side of counting how many $1 billion more shareholder value we unlock, it's important to say that we had done a lot of, management had done many things that are really what you call moving the needles. We are not trying to get from A to B with the shortest distance because we believe that building the quality of the people, the right culture, the ability for us to execute, to run a stable and progressively improving company is more important than trying to get quick wins in the meantime. So I think the management team has done that. They brought in a lot of good people. They also reshuffle a lot of internal people to utilize the best out of our internal organization as well. I must say, coming from the ASB side, the Ascended Sandwich side, that the introduction of the Ascended Sandwich folks into the organization have been also a very positive change to that. That many of the good people are not just being appreciated, they also put in very good use as well. So I think the transition being so seamless, now the former CapitaLand really had an organization that consists of three groups of very strong people. The core CapitaLand people, very good organization, very, very good people. And then on top of the Ascenders, people coming in and felt that they are really can settle down and be a major contributor into this new company. And then, of course, the new people that we brought in from the outside. So the three group of people are able to gel and work together as one team going forward. I think this is something that may not be able to be shown in the numbers as yet, but I clearly that we build the foundation to be a lot more successful going forward. And Chee Koon said many times, and I echo what he said, never waste a crisis. But we have many crises that come along, starting with the pandemic and coming, which we did the restructuring during that 1.5 years, and then now with the whole world is going we talk about the deglobalization or decoupling. So we try and take advantage whether we can pick our spots and do well. So I think there are a lot of things that we are now going through, and that's why the strategy side of this company become quite important, and we could be a unique player in this new space going forward as well. So I would say a lot of great things being done, but the best is still yet to come for this company. That's my very honest opinion.
Well, I think to transform, well, first of all, a merger of any company involves great changes in terms of the culture, in terms of the impact of the people working in the various organizations. But a total transformation of a company that you need to multiply that angst by X number of times. The old CapitaLand was more of a developer, operator culture, where people were excellent operators, really good understanding how to run the various businesses. Now, what we're telling everyone is that the 4 pillars of our strategy going forward are going to be to maintain and increase our leadership position in the public funds under the leadership of Jonathan, right? Our hospitality group under Kevin, and then to grow 2 new products, private equity real estate under Simon, and private equity in alternatives under Patrick. That's a 50-50 split between the old and the new CL and CLI. So there naturally has to be a lot of meshing of gears, bumping of heads, arguments, but all done under the right motivations, under the able leadership, with the right sorts of encouragement and incentive plans in place, and an understanding of where we want to get to. That, I think, is infused in the present culture of CLI. Those that do not want or are unable to sign up to this new CLI have either gone or are in transition, which is rightly so. There's no good or bad about that. It's a direction that we want to take the company, and if if your views are not simpatico with that, that's fine. We part ways on amicable terms, sorry. So I think that there is absolutely a need for this tension in the culture. And I think it will, by all accounts, what Miguel has said, the experience integrating the Ascendus Singbridge team into CL, was excellent. But that was rather easy. It was, mostly same culture, same sort of DNA. This involves a little bit more, but the track record of the leadership has been excellent so far. So I'm very positive about this.
It's an important question. I've touched a little bit on it already, but if I may just pick up your point about people and culture, it's very, very important, because all the best laid plans in terms of strategies need to be implemented. And that's where people and culture, that's where the rubber hits the road. If you don't have the right people and the right culture, you can forget all about your theoretical plans. So that's the first thing. So I already touched a little bit about what are the guardrails. Maybe it would be easier to explain it through an actual deal, which was that CICT is actually the result of a large merger. Okay, originally we were CMT, which incidentally was the first listed REIT in Singapore, and I remember it well because I was on the regulatory side at the time, and this was the first REIT, and it was purely Singapore malls. At that time, I think we owned 14 malls in Singapore, and we were looking at what was the strategy going forward. Okay, so now after a lot of work with consultants, a lot of strategizing and all that, they said, okay, we need to diversify. Diversify how? And we need more heft. So heft how? So you could either get more malls, but not just in Singapore, so diversify geographically, or you could go, because we were doing a lot of integrated projects, but we only owned the mall section. So should we get into integrated projects? Should we get more into office retail? So all of this big strategy was done, okay? So how we led it at the board is that we think in terms of what we need to do. The who we need to do it with comes later. So the what we need to do is the first order of the day. And we decided pretty quickly that we needed to actually get heft both geographically as well as a diversified portfolio in terms of property mix. So that was an easy decision. Then it came to who, okay? So here, the independent directors and I were very, very careful. We asked our financial advisors, we asked the IFAs as well, do a scan. If this is what we want to do, who can we either acquire or merge with? And it doesn't have to be only within the sponsor group. Do a big scan. And they did that for us. And then we start narrowing it down. So there was a large beauty parade, and then we started narrowing it down, and then guess what? We found that a good fit for us was another CapitaLand company, another CapitaLand REIT, and that's how we progress. But the decision had to be from that top level right down, and then the who became part of that strategy. And then because it was an IPT, we had, as I mentioned, guardrails around it as well. As you know, a REIT is somewhat different as well from other property vehicles because we have a trustee level. So we have, if you like, the benefit of a trustee, which is a totally independent look, that has to look at all the transactions we do. They do their own valuations. They do their own, they scan an IPT list through us. So there were many eyes looking at it. And fortunately, the merger was done, and I think it was the right thing to do. Definitely, we have the heft now. We have a diversification, and it has served us so much better with all of these. When we mooted the idea of this merger, we didn't think COVID was not on the radar. Then we got broad swiped by COVID. We thought we've turned the COVID corner. We broad swiped again by, inflation. The cost of running our buildings has gone up so much. We are now faced with the possibility of high inflation and low economic growth. It's another corner we have to turn. But that's our jobs, right? We're supposed to be looking at risks and opportunity. Nobody said it's going to have no risk. And in fact, if you think that there's nothing that can come up and hit you, you're really very complacent, and that's when you're going to sink if something does hit you. So.
Before I answer that, I realized I wasn't complete in my answer on people and culture. So it's not just hiring Simon and Patrick and that's it. They've brought in people with new skills to the organization, right? People who understand how to raise funds, people who understand how to portfolio manage a portfolio of assets in the private equity world. So there's this dynamic within the organization that's transforming the organization. But what I've observed and my fellow board colleagues have observed is the level of respect in the discourse, right? There's no, I know better, and there's you know better, and how can I learn from you? So I think that kind of atmospherics is really, really positive in my mind for the organization. Now on ESG, I'll steal a line from Chee Koon. I don't want to steal Vince's thunder because he's going to do a long presentation this afternoon. Put it this way, we have put out a Sustainability Master Plan 2030. And this has been out there since 2020 when it was a Sustainability Council. Now the Sustainability Council has been absorbed into the Strategy Committee and thus is one of the board committee, one of the board committee's focused areas at that level. CapitaLand is no latecomer to the sustainability issue. ESG has gotten very fashionable and rightly so, and it's been a topic that's heavily demanded by investors. But CapitaLand started reporting on our green credentials in the year 2000. In the year 2010, we issued the first sustainability report for an SGX listed company for fiscal year 2009. So we have actually been on this path for many years, many more years than any other company in Singapore. What does the plan say? It provides a end path, but it also provides a glide path towards how we can hope to achieve some of the targets, which are all science-based targets, utilizing all the globally recognized indices and benchmarks out there. So the next question then becomes, how do we execute? And in this, I anticipate some people will say, well, going into new economy products like data centers, isn't that hypocritical? You talk about sustainability. Well, we have a very simple thought process about that. Just as we can't do without air conditioning or refrigeration, which are not exactly environmentally friendly. Our contribution is then, how do we make data centers less polluting, right? Either if we were to build it, to make it more aligned with modern standards, modern environmentally friendly standards, or if we are to acquire existing data centers, how do we then transform it in its operations, utilizing renewables to power those power stations, to power those data centers. So the thought process is that, yes, as we are moving into certain segments of the economy that could be less environmentally friendly, we can still make a positive impact in terms of reducing the carbon footprint on the planet.
We had actually a very elaborate system in terms of performance management. And I always had to joke about it. It's a very Singapore Temasek way, and they really are very detailed in terms of looking at management's performance. And the chart is quite complicated. But I take the view that KPI should be quite simple. And we look at the few things that the management do well, and the board should not overmanage the management team. I take the view that if management had as I said, the three things, the big three, they do that well, and they also would be able to move the needle along as per the strategic plan, then that will be the way I look at KPIs. We have strategic plan, which is for 3 to 5 years. And I always take 3 years to gauge, because year 4 and 5 is usually just extrapolation of the year 4, year 3 number. And then you have annual budget. And the management had the credibility to continuously deliver what they promised to deliver. I think, to me, that is the best KPI you can have. Although the system itself, I want to just say that does have a very elaborate way of looking at a balanced scorecard and all the other things, EVA and all this. So we are all benefited from this very elaborate system of Temasek, and I think it's a good system and we should follow. But from my personal point of view, I look at the big items. Again, it's a management respecting the governance, not taking shortcuts. And are we executing this as per our strategy, looking at the long term rather than trying to burn the furniture, throw in the kitchen sink for this year to make the number? And thirdly, are they treating the people well, the people who are in the company, want to stay with the company and want to grow their career with the company? And even if they leave for whatever reason, they stay on as the friends of CapitaLand. They become our supplier, our customers from the other places as well. So that's how I look at KPIs.
Yeah, if I may add, I was going to say that the Temasek balanced scorecard is very, very detailed. And my personal view of the board's responsibility is that you have to know that, well, we have to know that we are not the experts on the ground. Management is. We are the compass. We're not the map, right? And sometimes when I look at the balanced scorecard, it's like, you tell management we want to go to Penang, and you are seated in the back seat whispering, why are you turning left? Why are you doing that? All I want to know is that if we suddenly are on the ferry to Bintan, how does that help us get to Penang, right? So I think it is a useful scorecard to have, but at the back of our minds, we need to understand where our responsibilities lie, how we want to hold management accountable, as opposed to, be into the details too much, telling them what they know much better than we do in terms of operational ability.
Sorry, you know, it ain't over till the fat lady sings, okay? So if I may, can I just add one perspective as well? And this links to an earlier question you had about people and culture. So the balanced scorecard, I fully agree, is very detailed, and it's the science of it that's there. But is really managing people a science or an art? Okay, and we have to remember that there are certain an envelope that we have to put around balanced scorecards to make sure, and to put it in a shortcut way, it's not just what you deliver, it's how you deliver it, okay? And that is, I think, very important in a VUCA world. Thank you.